Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all as promised at 11:30 a.m. And it's a bright sunny morning here in the hills, and hopefully you are also doing well as the weather changes and we are into the you can say the spring season. Looks quite good, and hopefully if you are in the right stocks, if you are in the right sector, you'll be able to invest and trade well into the markets. Uh, so today I'm going to talk about two companies in the tech space, totally different, but they are in the tech space, which have come out with very strong numbers for a Q3, and it looks like they'll continue to perform really well in the Q4 segment as well, and going forward. But is has you can say corrected from the top or from their 52-week highs appreciably, so coming at very discounted levels. So we'll discuss that, plus I'll answer your queries as well, and we'll have a little bit of discussion about the markets. As it's a Sunday, I'll wait for people to get in. I'll wait for more people to come in, and we'll begin the session in earnest. Before that, I'll talk about the markets and then move forward. Hi, Bharat. Hi there. Hello, Mr. Pawar. A very good morning to you. Nikhil, hi. Pradeep, hi there. Ganesh, hi. Uh, Rohit, I'll answer your queries as well. So we'll get going on that as well as more people get in and join into this live feed. So hopefully you are doing well, although markets are not obliging and there is a continuous decline in the mid cap and small cap segment. Is in fact the mid cap index around 29,800 is just about 500-600 points from the lows, and I won't be surprised if that gets touched this week because of the kind of tensions we are having in Europe because of Russia having that invasion thing over Ukraine and many other things going on, with America getting into the mix. We are having the Dow Jones down by around 500 points on Friday, so we'll have a gap down opening on Nifty. But the point here is that we are closer to 17,000 now. Suppose the gap down is below 17,200, then we'll be very close to very strong support levels of 17,000. And I feel once that is touched, maybe by Tuesday, we can probably move ahead and probably move higher, because the fundamentals of Indian economy looks good. The fundamentals of at least companies which are listed look good, and larger companies. So I think the stock market may stabilize around 17,000, 16,800, unless everything collapses worldwide, which is a possibility with the kind of things escalating in Europe. But we have to be prudent in the fact that if you are in the very good quality stocks, then just keep stay put. And so because if you sell, then you'll have to buy something going forward, and everything is falling. So it won't be like you sell something, say, with a 10-12% profit, and you end up buying something and making money. Either you will have to be in cash for 3 4 5 months, or you, if you can do that, probably you can do that at the moment. Otherwise, if you are a even a short-term trader like me, even a short-term, you can say, investor like me, who put in money as positional trades, then it's better to stay put with your winners rather than shuffling here and there. So that's about the markets. I think 17,000 will be a strong support, and 17,500 would be the time to probably book some profits if you're making 10 to 15% or so. So we are right in the middle, and we might open below 17,200. So it's time to probably hold on and see a reversal happening in the market probably in a week's time. And probably by end of February, we'll have 17,500, 600 on the index. And that's where you can analyze and look at where your stocks are if you are a short-term trader, and probably book some profits. For investors, these are the best times to invest. Between 16,500 and 17,000 would be good levels to get into all the mid caps that you always wanted to be in. Say 6 months back, when you were looking at those mid caps and you were thinking as to when to buy, this is the time for you to really get in. If you have a 2 3 year time frame, even then buying right now would be very prudent, very good. Unless you have less than 2 years time, then the road could be treacherous, and you could be in a situation where you might lose. Unless you have that, if you have a 5 year view, 4 5 year view, you can get into very good quality mid caps as well. Okay, now coming to my point of the two, you can say, tech stocks that I wanted to talk about, both in different spaces. One is into mobile technology and advertising, and the other one is into AI. Other one is into, you can say, robotics, etc., and many other domains. And it's a small cap IT company or smaller IT company. Uh, so first of all, I want to talk about is Mastec. Uh, Mastec is a stock which is not a lot talked about on television channels here and there on many occasions, but this has been coming out with very strong numbers continuously over the last 2 3 quarters. The numbers have been extremely good, and the stock has not performed that much. So the stock has a market cap of 8,000. So the company has a market cap of 8,000. Let me just go through its numbers for the quarter gone by, the December quarter. So they came out with sales of around 550 crores versus last year sales of 440 crores. So there was a good 25% increase in sales. The operating profit, or operationally, the company did well. So 116 crores versus operationally they did 104 crores the last time around. So expenses went up. And so a reason for maybe the decline in the recent past has been lower margins. So margins dipped, yes, by 2% to 21% versus 23%. But the stock has declined a lot from the top. If you look at the net profit was around 74 crores versus 57 crores in December. And hence you have a good 30%, you can say, increase in profitability year on year, which is quite good, quite decent. They are to come out with an EPS which will be closer to 100 rupees, 102 rupees EPS for a stock that is at a price of at the moment its price is around 2684 for 102 rupees. That's your EPS, your PE comes to around 26, only 26, when you are looking at other companies in the IT segment which are having PEs of 35, 40, 45. A P of 26 is very reasonable for a company like Mastec. And in my opinion, it is a buy at these levels and on slight decline. But again, you should be having at least 2 years time frame with the stock, and a potential target of around 3600 to 4000. That is very much possible. So that's about Mastec. Very strong numbers. And one more thing I want to add here is that they are to announce a number of deals that could come through by first quarter of next year. So really, the you can say the momentum will pick up from FY23 onwards, and I won't be surprised if they clock an EPS which would be closer to 130 rupees or so, 125, 130 rupees. So if you look at FY23 earnings, this is trading at only 20 times earnings. So very attractive, very good at this point of time, a Mastec. The second stock, and it is in totally different domain. This is into mobile, you can say, technology, mobile advertising. And the stock I want to talk to you about is FL. So FL is something I covered a year and a half back, just when it had its IPO, etc., and things got going. Currently, it has a market cap of 16,000 crores, and the stock has run up from those IPO price or IPO days, etc. So if we look at a 3 year chart on FL, if we go back in August of 2019, the stock was trading at 168 rupees, and now the stock is trading at around 1200 rupees. So there have been a rise of 6 7x rise over the last, you can say, 2 years. Over the last 1 year, the stock hasn't done much, and this is where I feel the stock could perform much better. So FL was around 1037 in February of 2021, and it is right now trading at 1222. So it has moved up by just about 10, 15, 10, 12% over the last 1 year. But how has been the performance of the company in terms of numbers? When you look at December quarter numbers, yes, the margins shrank a lot, but the sales went up sharply. So it's a mixed result, but I believe that the way the sales have went up from 135 crores in, say, 150 crores in December to 340 crores in December of this year, December 20, it was 150 crores. So this is a jump of 130% nearly, which is quite tremendous. Yes, they had higher expenses, and so operating profit was 68 crores versus 38 crores. But again, operationally, the profitability is big, although margins have shrunk from 26% to 20%. But 20% margin on such high sales would accrue a lot of profitability. 62 crores of profit, net profit, it clocked versus a net profit of 31 crores. So 100% growth year on year in profitability, an EPS of 4.66. I am expecting another similar quarter in March, say around 300 crores or so. So an EPS which would be closer to 4.2 rupees would be there. So if we combine the EPS for this year itself, it would be around 8.9 plus 3.5, so that will be around 13.4 and 2.6 of 16 rupees, an EPS of 16 rupees for a stock that is at 1220 rupees. That comes out to be a PE of 76. So it's trading at a PE of 76. If it grows at 50, 60, you can say 50 to 60 percent, the way it is growing on the bottom line, I think a PE of 75, 76 is not very high, although it's trading at a higher PE. But you need to understand at current valuations, it is trading at 75, 76 times. 1 year forward, I expect that the EPS from 16 rupees could easily go up to 22 rupees or so easily. I mean, 35, 40% profit jump is very much possible. So if we take 22 rupees as an EPS and 1220 rupees as the price, it's trading at 55 times earnings for a company that will grow at 40, 50% year on year. The way it is growing, it is very reasonable. I think if you get the stock around 1200 to 1100 in that region, very good levels to get into something like FL. Even from here, I think in a couple of years time you will see 1800 to 2000 levels. So FL is another stock to be looking at. I am also looking at it. I don't have cash at the moment. I'm fully invested. But if I book some profits here and there, I might be looking at FL as my first pick to get into. Looks extremely good after the numbers. All right, so I'm ready to answer your queries. Can you use the super chat and super sticker feature, and that will help me grow the channel. That will help you also ask me questions, any count answers in greater detail. So you can shoot your questions now. Sir, BCG group, I'm not at all, you can say, analyzing the BCG group at the moment. I'll do that and then I'll have a comprehensive video on the same. Nikhil, IB Real, a disclaimer, I have the stock. It's around 140, very reasonably priced. We have to see how things pan out with the new management, how the numbers pan out, and how has been the QIP thing. Once that comes about, then only I can say that where the stock is headed later on. So that's a call there. All right, TTK Prestige is good for long term. Somebody who wants to buy or invest into the stock with an idea of 12 to 14% CAGR can get there, and safe returns could be possible in TTK Prestige from here. All right. The what is wrong with Solara Active is that the numbers were horrible, to say the best. The numbers were very bad on the bottom line. Uh, were bad on the top line, and everything decreased, including the margins, and so the stock is falling. So that's the simple thing. You look at the numbers of something like a DVs, you look at numbers of even Sequent, which have come out with, their margins have improved quarter on quarter, whereas something like Solara, it's everything has gone down. All right, Harsha, your average price on Kilpest is 300. See, if you have a 3 to 5 year view, it's a hold. I have the stock, so it's a disclaimer. So kindly take that on note. But I believe that the numbers were good. I feel that the numbers were pretty good, because you need to analyze numbers with the pre-pandemic era, not with the pandemic era, because the prices of the kits have gone down appreciably to 50 53 rupees, from 1100 rupees at the peak. So there's no way you can compare pandemic era numbers. So pre-pandemic, they had sales of 7 8 crores. It has gone up to 14 15 crores, and we are looking at an EPS of 26 27 rupees for FY23. Based on that, the numbers look good at around 373. It looks a good buy. All right. Say Bajaj Finance. I think Bajaj Finance should do well. And if there are any financial companies or companies into finance which I like, then that's the Bajaj Twins or the HDFC Bank. That's just about it. I don't recommend that one should buy into financial companies. I don't do that myself, because it's extremely hard to analyze and a lot of things attached to it. But if you want me to pick one, then Bajaj Finance would be the one to look at, especially after the fall, especially after it being at 7,000, after have fallen 12 15% from the top. See, Budget Paints and Asian Paints both are good. I would prefer Asian Paints at around 3,000 3,100 to be bought into, with the kind of correction it has seen, time wise correction as well. Compared to Berger, I've always preferred market leaders in spaces, so I would prefer that. Right. See, CN, the issue is not with CN. The issue is with many mid-cap IT companies. You look at Builders Out, you look at Happiest Minds. Happiest Minds from 1600 is at 1070. And you look at any other company in this domain, the mid-cap IT pack has got absolutely hammered over the last, you can say, 2 3 months or so. I think this trend could continue for the next couple of months. You look at Mastec also from 3,700 to 2,700. But one should start accumulating these stocks, and hopefully in the next 2 3 years you'll make money. If you have very short term time frame, then should be avoided, in my opinion. See, Zomato, the losses have narrowed down, but in my sense, uh, uh, the company need to perform big time. Only then the prices would move up of the stock, because you have to understand that Zomato, or Swiggy, or any such companies did well because of the pandemic. Now that the pandemic is virtually over, it is extremely difficult to, you can say, foresee very huge sales numbers also, because people will move out. People are frustrated, they'll move out, they'll go to restaurant, they'll go to, you can say, outside places to eat out, etc., rather than, you can say, uh, calling in food. Although this trend will remain, but next year's numbers, FY23 numbers, will not be the same as has been between FY20 to FY22. So you have to understand that. Okay, LIC IPO, I'm positive that the IPO would be big. CDSL, I don't know whether it is priced in or not. It could be possible that at 1700 everything is priced in. On CDSL, it could be that we'll have a rally. So if you are holding CDSL, probably wait for the IPO timing and everything, and probably just before the IPO, if there is a run up in CDSL, then you exit the stock at 1700, 1800, 1750 levels. Okay. Relaxo is also good. Bata is good. Relaxo is coming out with good numbers, and especially with schools opening up across the board, I think these companies, leather and shoes manufacturing companies, should do well going forward. So that's the call. TCS looks good here, so one can buy into TCS. I think one can buy from a 2 year point of view. Large cap IT has fallen 15-20% from the top. Good time to start accumulating at this prices. All right, guys. Thank you. Thanks a lot for being online. Please do like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.